Hey, Bulls and Bears, back with another dose. The economic forecast just got a lot darker. Many of you may not believe this. Some of you may believe it, but the debt just increased again. The average household debt increased, and it's only looking to get worse and worse. Where does it end? We're going to find out later in this report. We're going to get into that. And we've got a lot of other financial economic news to get caught up on, so strap in, buckle up. Let's go ahead and get started right here. The markets actually went up today, even though the U.S. credit downgrade occurred. And there's been several downgrades over the past 5 to 10 years. This is just the latest one with the Moody's downgrade. But the markets actually held up very resiliently. And we said right here they could just push this market up at the click of a mouse. Everybody knew this. That's why we bought the dip right here. If you remember, a few weeks ago, if you've been on this channel, I said I'm buying the dip. I went in and bought an index fund, not exactly at the bottom of the dip, but near the bottom. And now if you take a look at stocks, we nearly recovered. And if we continue this trajectory, we're going to be at new all-time highs in several of the indices, the S&P 500, the Dow Jones. So we're going to keep an eye on that. And folks, this market, it's nowhere but up unless something big happens. If it could survive a credit downgrade, then it could survive about anything. And I've said this here, I've said this on this channel 100 times, maybe 1,000 times, that in order for something long-term to bring this economy down and bring the markets down long-term, we're going to need a major, major change in the entire system. All right, not just a surprise credit downgrade, which shouldn't be a surprise, should have been downgraded a long time ago, but we would need something catastrophic, something major, major structural change in the economy. Otherwise, things are just going to continue as normal. The dips will be bought up, markets up to new all-time highs, prices will continue to go higher, no price corrections, no bubbles bursting, no economic downturns. But in my opinion, though, and I think a lot of you would agree, that we are in a downturn right now, but different than other downturns. This is an inflationary downturn, which is actually worse than a downturn when prices collapse and prices crash. When prices crash, people that held on to cash and have cash to invest, they're rewarded. They're rewarded. When prices crash, things become more affordable. That was me in 2010. I actually bought real estate in 2010. Bought some stocks in 2009, 10, 11. Now that whole era of a recession, prices were suppressed. And then what happened? And they cranked up the money printer, inflated the bubbles once again. We're way above where we were as far as the price levels. But look what just happened here recently. We have household debt setting another record. Household debt hits record. Let me move myself out of the way here. As student loan delinquencies rise. So folks, now that these people can't pay their student loans, and they've been unable to pay them for years, but now that it's actually being reported to the credit bureaus and counting against their credit scores, their scores are tanking. That means they're not able to get new lines of credit to pay off the other credit. So if you've ever been in debt, you might have played the credit card balance transfer game. We open up a new credit card. You get maybe a 12-month period at 0%, so you pay off the other credit cards that you couldn't pay off, and then you do it over again, just never ending. So these people now with their credit scores dropping, now that the student loans are being reported to the credit bureaus and counting against them, they're not able to do that, shuffle the credit game like they were once doing it. That's why we said right here, we're going to see a big, big shock this year amongst tens of millions of U.S. consumers. And that will show up in the economy. Does that mean prices are going to crash? No, because they can just keep on pumping it up with inflation money. All right. And for those that didn't know, it never has to end. Don't tell anybody. They can create endless amounts of money. They can print endless amounts of money. Don't tell anybody. We're not on a gold standard anymore, ever since 1971. So people often ask me, why does the bubble not burst? Why aren't prices going down? That is why, folks. It all goes back to that. Household debt rising, though, another record. It increased to $18.2 trillion in the first quarter. That's up by $167 billion from the previous quarter. So even though delinquencies are rising, household debt was already at an all-time high, it went up again. But they told us back in March that people were paying off their credit cards, right? Folks, we told you right here that that wasn't true. And of course, now we see the debt climbed again Delinquencies on student loans increased, of course. Credit card and automobile loan balances. Overall delinquencies rose on those as well. Americans are deeper in debt than ever before. That's according to the Fed Bank. Most recent snapshot, all-time high debt, folks. Where does it end? Again, it doesn't have to end. They can keep on pumping money, helicopter money, fuel on the fire. They can keep it going, folks. That's the scary part about it. And now on the back of the U.S. credit downgrade, the latest downgrade, we see that the dollar is selling off and rates are rising, right? So when investors sell off U.S. bonds, U.S. debt, rates rise because they need a higher rate to attract new purchasers of these bonds. And what are we seeing now here? Financial stress reaches critical levels. That's what they're saying here out of coindew.com. As mortgage rates, delinquencies, and home prices soar. So we did see mortgage rates now jumping up over 7.5% on the average rate. And the housing market's already at about a 40-year low for transactions and sales. And it's going to slow down even more. And that means more layoffs in that industry, folks, because the volume is so low. And also we have this here, latest report here, latest numbers. Instead of a 4-year high, delinquencies are now at a 5-year high. That's out of Fortune. As student loan payments, the pause expired, folks. They were on a pause for about 5 years. And that's the only thing that's really kept everything from imploding on the consumer end, right? Is the programs to keep people from financial Armageddon, so to speak, right? Remember, we had all the eviction moratoriums, we had foreclosure moratoriums, eviction protection programs. We had people didn't have to pay their electricity bill and their light bills for sometimes 12 to 24 months. And those things, once they're taken away, that's when you see the consumer implode. Without all these programs to save people, the consumer would have imploded a long time ago here. So what's going to happen next, folks? Well, let's get into this. We've got this right here. Target workers exposing tariff price hikes. Tariff price hikes. And here's a photo from a report here out of the Mail. And what does it say here? Instead of $9.99, $17.99. That's what they're saying out of this report here. And is it an employee from Target? Does he still work there? Thanks to insider information from Target workers, the extent and the raises are becoming apparent for these tariffs. A $9.99 USB-C cord from the store's in-house Heyday brand is now ringing up at $17.99. That's crazy, folks. $17.99 for a USB cord, Type C. Even $9.99 was crazy, folks. You can get them off of Target and Temu and stuff like that. You can get them for like $3, $4, $5, right? They may not be the name brand that you want, but it's still a USB cord. And a lot of these items too, if they're not name brand, a lot of them, if you look at them side by side, they're pretty similar to the name brand. What a lot of name brand companies do is they just have a manufacturing, they have it manufactured for them, putting their name on the label. But when you look at the product, it's the same as a generic product. And they'll just hike the price up because of their name, folks. So be cautious of that when you're looking around. Not always, but a lot of times you get what you pay for, but not always. Sometimes you're just paying for the name brand, right? That's true with fashion and electronics, a lot of things like that. And it goes on here. Shoppers have already seen costs rise drastically at popular stores, like especially the big ones out of China, Shein, Temu, and even Amazon. So far, the increases have not made a major dent in national inflation data. In fact, inflation slowed the previous month, but we didn't see prices come down, did we? Like we were promised. And we even have people out there suing the federal government because of price hikes. This is somebody who put out a cookbook, an entrepreneur. Emily Lay sank into her couch and began writing about the threat that these tariffs posed to her 9-person company. I cannot be quiet anymore, she wrote. Tariffs are killing businesses. That's what's being reported by many businesses. Well, it's tariffs, but it's also a lot more than the tariffs, folks, because inflation's been happening for a long time. And we're starting to see more evidence that this is really, really hurting a lot of consumers. Of course, evictions are going up because of the cost of living. is not coming down. So people are having a harder time in paying the rent. And you can get evicted more easily now in certain areas, especially Illinois. Take a look at this. Illinois families evicted for minor offenses under the crime-free housing law. Investigation finds. So if you have a criminal record, even if you're paying your rent, they can kick you out because they don't want you at their premises. Another reason to not rent and to own a home if you can. Because if you own a home, you're not going to get kicked out for being a criminal. You get kicked out for not paying your mortgage or for not paying your HOA bill. HOA can foreclose on your property, which is insane, but it's true. You can commit as many crimes as you want to. Being a homeowner, you won't get kicked out. But if you go to jail, you're going to have a hard time paying your bills and keeping your house, aren't you? Unless you've got somebody else there to pay your property taxes, to pay your mortgage, upkeep and all that stuff here. Moving on, folks, a couple other things I want to get into. The Treasury yield topped 5% today. That's the 30-year Treasury yield. As, again, people are selling off, investors selling off U.S. debt. And that was because of the Moody's downgrade. So what's this going to be? It's going to be higher rates, which could actually help tame inflation, but it's also going to make it more difficult for people with existing debt, right? So it's going to be interesting to see these two forces go at each other, the inflationary versus the deflationary forces, folks. Citi CEO, something deeper is going on in the financial markets right now. What is he saying? What is he predicting here? Out of Yahoo Finance. Something deeper is going on in the financial markets right now. What do you think deeper is? And the Citi Group CEO said, quote, "We're entering a new phase of globalization, one less defined by cooperation and more by strategic self-interest. Long-held assumptions are being challenged, not just by tariff announcements, but by a deeper confidence shock. The near-term impact is already being felt, and the long-term trajectory is being rewritten in real time, folks." So what do we have right now? We have a big scam that's been put on a lot of people. A lot of people were promised several months ago that cost of living was going to come down on day one. Sure, we saw inflation come down, but that just means prices are going up less quickly than they were previously. Bottom line, prices are still going up. We're not seeing the cost of living come down. So it's a big scam, folks. All they can do is throw fuel on the fire. And this is inflationary, folks. Until something massive comes in and causes major structural change, you're going to continue to see markets go up, prices go up, cost of living continue to rise or remain elevated in this case. And here we go, folks. So let me know what you think about this down in comments. It's about to get worse, in my opinion. We're going to hold on and we're going to buckle up and we're going to look for opportunities in ways we can actually profit off this. So stay tuned for our next report. We're going to get deeper into that. Everybody, like to know your thoughts down in the comments. Keep stacking. Bye for now. Peace.